Hello, welcome to your trades, the week ahead, and what a week it has been. It's punctuated by losses that have happened to the large caps as well as the mid caps. In fact, the mid cap and the small cap indices have fallen a lot more than the large caps have. And ahead of the US presidential election verdict coming in, I think it was risk off across the board, and we were no different. Volatility heightened, and that was the only thing that quite frankly went up in trade. Quick check as to what did well, what did not. There's not too much that did well, quite frankly, save for some gains in late trade for IT, but by and large you had a crackdown across most spaces. The pharma names, by virtue of what happened in terms of the US probe news coming out in late Friday, led to a big crack for the pharma majors. So Aurobindo, Sun Pharma, Lupin, you name a pharma name, and all of these stocks had a big problem this week. There were a bank of stocks like Bank of Baroda, Sun Pharma, Axis Bank, Asian Paints as well cracked about 12.5%, and stocks like Idea Cellular were no different. They had a bit of a problem coming out all of this week. There were some gainers, oil and gas in particular, and despite late losses, I think stocks like GAIL, ONGC and a few others had a reasonably decent trading view the whole of this week. Adani Port did reasonably okay for itself as well. And then a clutch of mid caps. I must say the Tata Group names, the likes of Indian Hotels as well as Tata Global Beverages amongst others, stood out for the kind of losses that they had even this week in the mid cap space. The question though to all our experts, and we'll get you a slew of voices of course on the show today, but start off with Mayuresh Joshi, he's fund manager at Angel Broking, joins us right now on the show to talk about his sense of what now, what after the falls that we've already seen in the markets, in anticipation of the volatility or in anticipation of the uncertainty that comes in as a result of the US elections. Mayuresh, good having you. Thanks for joining in. You know, that's the moot question, Mayuresh, that we all know that there is going to be volatility. In all probability, even in Monday's session, we'll start off lower. The question is, if we do indeed nudge those 8350, 8300 levels sometime next week, do the markets stage a comeback irrespective of the US election outcome?
Good evening, Neeraj. Again, the markets are predominantly focused on the outcome of the US elections in the next few days. I think, as you rightly pointed out, the markets are going to be highly volatile. So you expect a downtick again in the coming few days. But largely, I think you look at the Nifty constituents, the IT sector has largely underperformed. Within the banks itself, the corporate facing banks have posted weak set of numbers. You're probably seeing the pharma news play out as well, which is reflected negatively on all these stocks. The auto numbers were a saving grace because of the festive season, but whether these numbers continue, I think that's also going to be an overhang. And the new GST rates, so largely again, I think most of the Nifty constituents probably do not have the legs to stage a huge comeback rally. Though I think if the markets are expecting and factoring in a Clinton victory, if that probably happens, shorts can get covered in the system. But again, I think you need to be extremely stock specific in these markets. Whether the markets can correct from the current levels, it is a possibility, because I think what the polls are throwing out is creating a lot of uncertainty and overhang. So I think you need to be stock specific in these markets, specifically with all these conditions playing out.
You know, amongst other things that got done this week were companies getting impacted by GST. So the final rates came out, and while Friday saw a bit of a stumbling block as well, because the dual control rate mechanism has not, there's a bit of a disagreement out there. But if you just look at what came out in Thursday and the final rates, which are very important, essential commodities 5%, standard rates 12 and 18%, demerit goods 28% plus cess, and it's unknown as to what the cess is likely to be as well. So from that perspective, it's difficult to say what will happen to those goods. But Mayuresh, two pockets to my mind that stood out as a result of GST. One was the benefits that probably accrue by virtue of pure taxation to the consumer staples, and I think they showed that bit of a reaction. Would you be tempted to go out and buy those companies purely by virtue of this GST news?
Again, I think it is beneficial in terms of the rates that have got announced, and as the Exchequer was mentioning, items of mass consumption will probably come in that 18% standard slab. So again, I think a whole host of FMCG companies which are probably into these categories, which can be soaps, it can be toothpaste, it can be anything related to mass consumption, are going to feel the benefit of lower rates come through. Whether the demand environment is strong enough for the companies to benefit from the leverage that will come through apart from the tax benefits and the margin expansion that we'll probably witness, I think the environment itself for companies like Colgate or even to that matter HUL or Godrej Consumer still looks a little bit soft. So if one really assumes that the volume growth activity will pick up over the next few quarters, the leverage will play on their balance sheet and EPS upgrades will definitely come through. Most of these companies have very strong moats in their respective business segments. Colgate, for example, market leadership position in the toothpaste segment. Godrej Consumer has a variety of businesses, most of its overseas businesses safeguarded from the internal businesses that it has. But again, I think soaps, household insecticides, I think, and even the hair color segment, I think that would augur well for Godrej. So largely, I think FMCG companies specifically should do well, and even within the white goods, because of the tax rate at 28%, my own sense is that you will see benefit come through, but the demand environment and the volume picture has to be very, very robust. So I think these sectors structurally should do well, but one really needs to be cherry picking within these sectors as well.
Okay, here out Nilesh Shah, MD and CEO Envision Capital, who says GST is a huge opportunity for the government to offer good governance in long term, and he speaks about specific sectors as well.
The consumption story or the demand story, I think, will remain. I'm not quite sure that GST will in any significant way lift up demand or pull down demand. I think the overall demand in the economy will get driven by a whole host of factors, which is basically the good monsoon, pickup in the rural economy, stability at the farm level, falling interest rates, revival of the investment cycle. I think these are the big drivers for demand as far as India goes over both the short to medium term. The sectors to really look out for would be, I think, clearly the consumer appliances. I think is a space, that's something where we are going to basically see a structural demand kind of an environment which will continue to play out for many quarters and many years. So I think that remains one of our top picks. I think in the consumer space, apart from of course the staple space, I think there are some of the other pockets like apparel and fashion. I think that's a significant opportunity out there. And then moving on to basically areas like specialized engineering, the BFSI space, banks which are a play on financial inclusion. I think that again is a very attractive opportunity. And then of course currently what is beaten down is basically technology and to some extent pharma. I think post this current round of correction, both technology and pharma will also kind of be available at attractive valuations, which can be kind of evaluated and invested into with a 2 to 3 year horizon.
Yeah, well, speaking of pharma, the space was in focus. Darshan joins us to tell us what exactly spooked the street in essentially the US probe. Darshan.
It's been an absolutely horror week as far as pharma is concerned, because if you take the Nifty pharma index, that is down 9% in this week. And remember, this is the truncated week. So in 4 days, the index is down 9%. And the fall has been led mainly by the largest company in the pharma sector, and that is Sun Pharma, because Sun Pharma has fallen in excess of 12%. Now, majority of the selling in the pharma stocks came in on Friday, but all 4 days we saw enough selling that came in into the pharma stocks. Now, majority came in Friday on the news that came in as far as the Department of Justice in the US is actually investigating a lot of these generic pharma companies for price collusion. So pharma as a space is seeing a lot of weakness. Sun Pharma is trading at a fresh 52-week low. Most of the other pharma stocks are also rather weak in trade. So if you're looking at it, Sun Pharma, Aurobindo have cracked in excess of 12% this week. Dr. Reddy's, Cadila and Glenmark have fallen close to 8% this week, and Lupin as well as Cipla are down close to 5%. Now in terms of sheer market cap, Sun Pharma has lost over 20,000 crores of market cap this week. This is larger than, some of the pharma companies' market cap that we have. Apart from it, if you're looking at Aurobindo's lost 5,200 crores, Dr. Reddy has lost 4,000 crores, and Cadila has lost close to 3,000 crore in market cap this week. But it's mainly on account of Sun Pharma, 20,000 crore of market cap lost, and it's been a very, very poor week for the entire pharma space.
Yes, indeed, and the space was under a lot of spot of bother. The other, of course, space is what's happened to the mid-cap space. Actually, just before I get to the mid-cap names, so maybe we'll do that on the other side of the break. Mayuresh, come in on pharma, and whether you would look to maybe nibble into some of these names. Sun Pharma is practically halved from where it was.
So again, I think we were contending with FDA issues and largely analysts were factoring in remedial and remediation issues being at the forefront. The news that has come yesterday is a shocker. So again, I think the outcome thereof is largely unknown at this point of time, and which companies get affected is also not known. So again, I think companies within the top tier space should get accumulated at lower levels if these stocks correct further because of the pressure that we are seeing in markets. Selectively, I think if one has a 10 to 15% kind of an exposure towards these companies at this point of time on further corrections can be an ideal strategy. So something like Aurobindo Pharma is what I've always liked, and this has given an ideal opportune moment for investors to probably time this correction. So largely I think if the stock corrects further in Monday or Tuesday's trade, a small bit of accumulation can be done on Aurobindo Pharma, and then probably just wait out, I think, how these news unfolds and then probably take further steps towards the stock. But yes, I think a 10-15% correction at this point of time on further corrections is not ruled out.
Okay, let's talk on the mid-cap space as well, and Mubina joins in to talk about all the mid-cap stocks that were in focus this week. Mubina.
The broader markets really stood out last week, and some of the stocks were of course in focus. Century Textiles being one case in point, where the top line degrew 4% in its Q2 results, but what a beat in the EBITDA, really higher by 56.5%, leading to a margin expansion from 6.9% to 12%, and that's something that of course led to the company posting a net profit in this quarter of 41 crore rupees versus a loss of 31 crore rupees in the corresponding quarter. So a big move coming in Century Textiles. Metals of course can't get a rise of that, and Moil is one stock in focus after the company increased the price of its various ores and products by 25 to 30%. In fact, this is the third time that the company has raised prices in as many months versus the general trend of quarterly price revisions. Kitex Garments is as well reacting to its numbers. The top line degrew 20%, margins as well down from 37.6 to 34%, and that is something that of course did put pressure on the stock. We did see some fund buying as well, wherein Sanjay Bakshi's Value Quest India Mode Fund bought 2.65 lakh shares at 443 rupees. And lastly, in the pharma, we did see Spark reacting negatively to that US Department of Justice investigation into the generic drug pricing collusion. In fact, a lot of generic companies have received subpoenas as well, though of course this is just a sentiment move coming in on Spark.
Yeah, we just discussed pharma as well, so I'll tell you what, we'll take a very quick break right now. We'll come back and talk about the week ahead, what's lined up. It's the biggest event of them all, and the US elections give you a sneak peek into what you need to watch out for, and of course some key numbers that come out from the Indian markets next week. Back with your trades the week ahead. Amongst the cues for next week, I think will come up on your screen, and you have the listing of PNB Housing Finance on November 7th. So that's one IPO that garnered a lot of attention, and therefore that should be something at the top of your mind. We'll have the trade data and the IP data coming out on November 11th and November 8th respectively. Also the CPI data coming out on November 9th. I think, yeah, so these are the events coming in. I think the biggest of them all has to be the US presidential elections. Now keep in mind, for a lot of people who are not quite aware, how it will move is, let's stick with this graph, the US presidential elections. No, let's not move ahead here. Let's just go and stick with the US presidential election. That is the biggest newsmaker for next week. And keep in mind, what will happen is that Tuesday evening or Wednesday early morning is when we will get the first signs of who is likely to reach the White House, and therefore it will be Monday and Tuesday, the 2 days wherein the Indian markets will be trading at full strength before we get to know what is happening on the White House. Now, just to tell you a brief sense, the polls have tightened as the race has entered the last week. Clinton's lead over Trump has narrowed. Let me read out what the current poll tracker is saying. As coverage enters the weekend, on the poll tracker, Hillary Clinton has a 46.6% chance, Donald Trump 45.6% chance. So it's right down there. Trump, of course, has been trying to capitalize on Hillary Clinton's email leak scandal as well, and that has got him back into the reckoning. If you look at what the different betting sites are saying as well, there is hardly anything, there is not much to choose from, and which is why for now almost everybody is at loggerheads as to who is it that will reach the White House. The only thing is that, quite unlike the earlier polls that have been done by the US agencies or media, this one will see a very high voter turnout, and therefore difficult to say if the polls are predicting is what will come out. So this is something that will keep the whole world, not just our markets, right on the edge of the seats, and we'll get to know only on 9th November morning India time as to who is it that is reaching the White House. So very crucial to monitor come next week what's happening to this particular event. However, that's not all. Within that large event, there'll be a bunch of other smaller events happening. As I said, some data points coming out, and then of course Nifty earnings as well, a bunch of numbers coming out. Now Mayuresh, that's my question to you. I'm just looking at stocks which are the important ones out of the Nifty as well, which are going to come out with numbers. I think two banks, very crucial after what Axis has done. ICICI Bank and SBI become very important.
Well, yes, they do. And again, I think the corporate-facing banks are going to still feel the heat, like the numbers Axis has reported. So the drill down list for ICICI, which has come close to 38,000 odd, how much provisioning the bank makes upfront for Q2. I think that will be keenly watched out for. And largely, again, I think, as I've been repeating time and again, whether it's ICICI or SBI, the asset quality issues on balance sheet may very well continue even into Q3. So though you might see some stable numbers coming through for SBI, elevated credit costs and loan growth, which is still soft and tepid, I think that will have a telling effect in terms of ROEs and ROEs. But one really needs to see beyond these quarters. In FY18, the assumption is that credit growth should start improving. There would be absence of interest rate reversals, which will basically mean an uptick in NIMs, and both these banks are extremely well capitalized in terms of capital adequacy. So in that sense, I think a long-term view remains positive on both these banks, but numbers are expected to be extremely soft and tepid both for ICICI and SBI.
Can the tide turn with good numbers for Sun Pharma or Lupin, Mayuresh, the two largest pharma companies, so to say?
No, again, I think Sun is grappling with his own issues, and what happens with resolutions, specifically in its Salol and Mohali plant, I think that needs to be clearly monitored over the next few months. Any positive outcome on that front will have a positive effect on the stock, but again, I think it's dependent on these factors. For Lupin, again, in terms of their Gavis acquisition, I think the management was very clear that the second half will see some amount of recovery. We've already seen heightened competition in its key drug Lumetza, and what happens with Fortimet is also keenly watched out for. What happens with this Goa facility as well, I think that's an important thing to monitor for Lupin's case, and whether they have been successfully able to do some tribe transfers, because 30 odd applications at the end of the last quarter were pending from that facility. So again, I think need to understand management commentary, and as I said, for pharma companies, I think FDA resolution and remedial issues will eat into better part of FY17 numbers, and higher R&D costs will again have some amount of compressions on their EBITDA and bottom line. So again, I think FY18 you need to look out for management commentaries on the outlook ahead, and again I think wait for positive outcome coming through from FDA resolutions.
There is a Hindalco, there is a BPCL, it should be an interesting number. BHEL, which has lost a bit of ground, could also be very interesting. So those are some large Nifty names that you need to watch out for. There are a clutch of mid cap and small cap names as well. Mayuresh, my question though is, once all of this dies down and if the markets start to stabilize and inch up, what is it that people can look to buy, invest into?
Again, a whole host of sectors. Banks have fallen, as I said, for reasons that are very well known to the markets. So the larger private sector banks is something that look very, very interesting. Housing finance companies have actually come off from their tops that they've just recorded. So I think housing finance companies selectively look interesting because of the kind of scenario of falling rates to borrow. And again, I think the yields coming down gets offsetted by that. But again, I think the leverage plays on their balance sheet with reasonable volume growth and falling asset quality issues. Selectively, cement names as a structural story look interesting. As I said, pharma selectively looks interesting on further declines. And again, two key themes from a structural perspective. One is the transformer makers, which have gone significant underperformance because of excess capacity. ROC is going down, EBITDA margins getting compressed. It's looking very interesting over the next 2 years for them. And again, the gas distribution companies, they are doing a lot of capex and expenditure on the right things. And again, with kind of underutilization, specifically on CNG and PNG as well. I think these themes look interesting for city gas distribution players as well.
Great. Mayuresh, so good of you to accommodate our interview request and being patient with us. Thanks much for taking the time out and so much for joining into this coverage of your trades. It's a goodbye from all of us here, and we wait for next week, a very interesting week with arguably the largest event for the world, the US presidential election. So all eyes out for that. Thanks so much for watching this show.